What's going on, everyone? Welcome to another episode of The Remote Real Estate Investor. I'm Michael Album, and today I'm joined by Gregg Cohen, who's the founder of JWB Real Estate Capital. And he's going to be talking to us today about vertically integrated companies, turnkey solutions, and what investors should be aware of when it comes to investing in the Florida market. So let's get into it. Gregg Cohen, welcome to the show, man. Thank you so much for taking the time to hang out with me. I really appreciate it.
Absolutely. Can't wait, man.
No, I'm really excited because you've got a really interesting story and background. But for everyone who doesn't know, give us the quick spiel, who you are, where you come from, what it is you're doing in real estate.
Yeah, absolutely. So my name is Gregg Cohen. I run a company here in Jacksonville, Florida called JWB Real Estate Capital. We're here to make rental property investing easy for the masses out there, which most people see rental property investing as an opportunity to make money, to make a great return on investment. That's not usually what holds people back from it. What's usually the thing that holds people back is the experience when it comes to rental property investing. So we've really built our business to make this a wonderful experience. It keeps people coming back to be able to take advantage of an asset class here, which, historically has performed so well, and especially for what our country has been through over the last couple of years, has performed incredibly well. And I just think that there's real value for families and communities when you can invest in a stable asset class that performs well over time. You can do some really great things for your family, for the community, and for the world.
Totally agree. Just out of curiosity, what does JWB stand for? Where'd it come from?
Oh man, how far do you want me to take you down this path? We've been in business for 16 years, and like any other entrepreneur, we didn't know exactly what we were doing when we started, right? We started our business. Man, I could just talk for a lot of stories about this. My business partner is one of my best friends. We went to college together, and we lived in a house with a lot of our friends in college. And we just nicknamed that house the Hoos. Literally, it makes no sense. We called it the Hoos. Why? I don't know why. So when we first named our company, we were like, oh, we're 23. What should we name our real estate investment company? Let's call it Hoos Homes and Investments. Makes no sense at all.
Right.
So that company, it still is our holding company. We own a large number of rental properties, and it's still in Hoos Homes and Investments. But over time, that name clearly did not stick, did not share what we were hoping to accomplish in the world. We started to market ourselves under the name of Jacksonville Wealth Builders. And that was really when we kind of hit our stride as far as creating these turnkey rental property investments and packaging the property management services here in-house in Jacksonville. Jacksonville Wealth Builders really talked about what we do, but we're a vertically integrated company. And that means that we have everything under one roof: acquisitions, property management, construction. It is all here under one roof. And so we had Jacksonville Wealth Builders as a company, but another name for our company, our home buying company, was Progress Home Buyers. And then there was Peace of Mind Property Management. As we became bigger and started to develop a reputation in the community, people would say, oh, I really love that company, Jacksonville Wealth Builders. Have you heard about those guys over at Progress Home Buyers? I really haven't done too much business with them yet. Or Jacksonville Wealth Builders is great, but Peace of Mind Property Management, I don't know them so well. So eventually we realized, how to actually appropriately name a company. And that became under the JWB brand, which is now JWB Real Estate Capital, JWB Property Management, JWB Home Buyers. So JWB actually would stand for Jacksonville Wealth Builders. We just condensed it and made it a little bit more user-friendly for everybody to realize who they were doing business with.
Love it. And the Who stories. So I feel like so many people have similar college experiences or stories. Like, we were geniuses at the time. And looking back, you're like, what were we thinking?
You know what? We just weren't thinking very much. It's a credit, though, because my business partner and I now have 3 business partners. In the beginning, we just wanted to get out there and try to do something. We weren't afraid of failing. I think you can clearly see that by the way that we named our companies. We weren't afraid of failing. And so many investors out there just get paralysis by analysis paralysis, and they can't move forward, right? Just name your company something. You can't possibly screw it up any worse than I did. And, there are so many more important challenges to overcome than simple things like that.
So it's funny. My wife actually works for a company that has a very similar story. When he started it, he didn't think anything was going to come of it. And so the company is named Michael Management. And so when she posted that on her LinkedIn, a bunch of my college roommates were like, oh yeah, I also used to work for Michael Management in college. She's like, no, like it's a real company. Like I actually have a job. I'm not just managing Michael's like life and stuff. So he's like, I never thought it would take off, and it's an SAP company. But needless to say. So talk to me, Gregg, about what it is that JWB does.
Yeah, absolutely. So we're a vertically integrated company. And what that means, as I mentioned, is we have everything under one roof. So what we do is actually we buy land and properties, but mainly land, especially in the current environment. And we've been doing this for over a decade. We buy a lot more land than we're actually going to build and sell that year. We've been doing this here in Jacksonville, as I mentioned. We started build to rent back in 2011, before all the big hedge funds and private equity groups and even home builders now are in this build to rent space. We actually started this in 2011. They put us on the front page of the Wall Street Journal in 2013 as being a pioneer in this space. And so we secure this land, we buy this land, we actually own it. And what that allows us to do is to create a path so that our clients have a consistent source of inventory that they can turn, that we can turn into positive cash flow and high growth investments for them. Once we own the land, we then build that new construction home. We then fill that home with a resident, and we do all of the property management in-house. We really focus on long-term resident stays. We believe that's the approach that's going to lead to winning in rental property investments. And so we only sign 2 and 3 year leases. We re-sign 70% of our residents, and that leads to an average duration of about 4.5 years for our residents staying in our homes. And then our team is just rock solid. We're here to make this a wonderful experience for clients. Most of our clients live outside of Jacksonville. We have clients in 49 states, 13 countries, and we get to serve over 1,300 clients and manage about 4,400 rental properties here in Jacksonville. And our team, we have about 85 people here on staff here, and just really focused on creating a wonderful experience for folks and doing something more than just literally buying, selling, renting properties, right? We believe we have a higher calling, right? A higher mission here than just doing property management. We think that we can really change people's lives by the returns that we create for folks, and also what we can do in the community through the platform that we have.
Amazing. Gregg, this is like a super niche way to get involved in real estate. I mean, you're kind of doing it all. So in that sense, it's almost not very niche, but curious to know, how did you get your start? Because this is, again, this is a very specific way to go about it.
You know, my story started where, I went to school at the University of Florida. I was raised by a single mom, and we never really discussed entrepreneurship. And we never discussed real estate. It was both my mom and my dad, two wonderful, loving parents, but they never owned a house other than the one that we lived in growing up. And so the idea of entrepreneurship or real estate investing was just completely foreign to me. I grew up, went to the University of Florida, and just tried to work very hard to get a great job. And I really found comfort and security in the thought of going and working in corporate America. I realize now how much I just really, really was excited about that because it's very different than how my life and my career has turned out. But I went to go and work for a company here in Jacksonville, a Fortune 500 company. And after about 1.5 years of working there, I was really just depressed, demoralized. What I had thought was going to be my career path was not what I wanted, and I really didn't know what to do. So a friend of mine who was also struggling with the same thing at the same company turned me onto that amazing book, Rich Dad, Poor Dad. That book changed my life, as I'm sure it did for you, Michael, and most of the listeners, I would imagine, right?
Mm-hmm.
So that book, I remember sitting down, reading it. It was about 9:00 at night, and I read all the way through till 2:00 in the morning. I finished the book. I got up and I looked at myself in the mirror and I said, I'm going to quit my job and start my own real estate investment company. And if you know me well, that is not how I make decisions. I'm very conservative. I'm more on the slow side. So this was a really big moment of inflection in my life and a very, very powerful moment for me. But the thing that I took most away from that book was that I couldn't just put my head in the sand and just assume that I was going to work for a company and that if I worked really hard, that I would just hit my financial goals. I had to mind my own business, which can mean doing really well in my active job, but it also means keeping my mind open on how I'm going to manage my investments outside of my active income.
Right.
But for me, the pain of working in corporate America for me was so great at that moment. And I was also 23. I didn't have a lot to lose. And I said, you know what, let me go big. My business partner, my original business partner, one of 3 business partners now, has been my best friend, and he realized that this was an opportunity to get me on board. He is much more entrepreneurial than I am. So what he did was he was still in his final season of Gator football over in Gainesville, and I was in Jacksonville working. And so his big plan was, you know what? I know I can get Gregg on board if I just literally move in with him. And so I didn't have a bed for him. I didn't have a room for him. So he came over and he said, hey, I'm going to come over for the weekend. He ended up not leaving, sleeping on my couch. And he wanted to make sure that I would see him every day when I would wake up and go to that job that I did not enjoy. He wanted to make sure that I would see him. And every night when I got home, just demoralized, he wanted to make sure that I would see him searching for properties, figuring out how we're going to build this business. And we did that for a little while. And eventually I gave in and quit that job, and we started this company. But in the beginning, we didn't really know what we were doing. We were just trying to survive. And over time, and really, this was 2006. So the market started to really change on us. We can certainly talk a little bit more about that, but long story short, we evolved into understanding what really that intersection of what we are built to do and what we want to be great at, which is that turnkey rental property investment along with the property management. We really just love the fact that people can trust us with their money. We happen to be experts in real estate. And we can perform as a team, even though they may live thousands of miles away, and return their money back to them on the backs of a very stable asset. That just became our calling card, and that's really what we're very passionate about doing.
I love it, man. Gregg, I'm curious. I think it's probably come as no shock that a lot of turnkey providers get a little bit of a bad rap in the industry. And so what makes JWB different, and who is a turnkey provider really a great solution for, and maybe who is it not such a great fit for?
I think that's a great question. I think that when I started to invest, when I started to build this company back in 2006, and we started to go to market with our strategy of what turnkey was, I remember needing to fully explain what the term turnkey meant, because nobody had ever heard it before, because it wasn't a very profitable niche back in 2006 or 2008 or 2010, right? As the market turned, right? It wasn't very profitable. And so you didn't have any turnkey providers. And I remember feeling like I needed to just educate and share with people this asset class, this possibility for you to invest in rental properties and to do it passively. And I just remember almost being exasperated because nobody understood it. Now, when I think about the space right now, you are overrun with companies that claim to be turnkey. The name turnkey means something different to every person out there. You don't have to spend as much time educating, right? Even the big media outlets are talking about why single family rental properties are such an incredible asset class. But now we're in this phase where we have to really specify what turnkey means, and what providers out there maybe claim turnkey, but really mean something different. For me, I really think there's a very big benefit for working with a vertically integrated company, which is a slightly different definition than turnkey. Turnkey for me is really working with somebody who owns the asset, who does the property management in-house, and who can control that experience. That is kind of the definition of turnkey. And what their job is to make sure they're producing a return on investment for you today. And that is wonderful. There's a lot of companies out there that claim to be turnkey, but don't meet that threshold. They might not own the asset. They might not do the construction themselves. They might not do the property management in-house. But if you want to be a passive investor, you got to have all the goals aligned. And that's really the turnkey threshold. The reason that vertically integrated is different and why I think it's so critical is it's a much higher threshold to be a vertically integrated company. Vertically integrated means that I'm not just taking care of your money today. I'm not just focused on selling you an asset that can produce cash flow. I'm not just focused on producing rent for you every single month and making sure that the home is rented and earning a return today. I want to take care of your money for the next 10 to 20 years over a full market cycle. And in order to do that, you have to be much more forward thinking, right? You have to be able to source inventory a decade in advance to make sure that you have enough runway for your clients to actually finish their buying plans and own maybe 3, 5, 10, 15, 20 properties as the market shifts, which it is right now. And you also need to be an innovative team. You need to have an innovations department. You need to be one where you're thinking of what things are going on in the local marketplace. What boards are you on in that local marketplace? Are you a player in the social economic scene in your local market? Because what many turnkey companies fail to do, if you're not focused on raising median incomes, which a vertically integrated company is, if you're not focused on raising median incomes in your local market, your return on investment has a cap. It has a ceiling. Because as we are finding across the country, affordability is becoming an issue in many markets, and it will become an even bigger issue. No matter what supply and demand does, if homes are too expensive, then your home prices are not going to appreciate. And home price appreciation is a big part of your overall return on investment. So a vertically integrated company is actively has an impact in raising median incomes in that market. When you raise median incomes in your market, home prices have the ability to appreciate. You have a better chance of producing a return on investment for clients. So I kind of took us down a path of vertically integrated. In my mind, there's a threshold of turnkey. First, make sure if you want a turnkey company that they own the asset, that they do the construction in-house, and that they actually do the property management. A higher threshold, if you're investing for a full market cycle, which is 10 to 20 years, you want to be investing with a vertically integrated company because rising median incomes and making sure you have a runway of assets is something that you need to be thinking about over that time span.
That makes total sense. So how does a vertically integrated turnkey company actually affect and be concerned with raising median incomes?
It's a great question. So, Jacksonville's downtown is a great example of this. Have you ever been to Jacksonville, Michael?
I have not. No, I've been meaning to make it out that way.
Yeah? Well, I hope you come down here. So Jacksonville's downtown is on the precipice of a really wonderful revitalization. Now, for anybody who is in Jacksonville who's listening to this podcast, you may have heard that same thing 5 years ago, 10 years ago, 15 years ago, 20 years ago. So we have so many natural assets here in downtown Jacksonville that we just haven't taken advantage of for many, many years. And what it means is we have to take advantage of the political will. We have to take advantage of the business community, and we all have to come together to revitalize what downtown Jacksonville is. We need to make this a place where employers come, employees want to live downtown, and then when we do that and we surround it by amenities, you're going to see median incomes rise in downtown. I'll give you kind of some numbers here. For the longest time in Jacksonville, we had a very low number of people living downtown. Number was about 3,500 people living in downtown. It's a really low number, and it stayed that way probably for, up until about 3 years ago, it probably stayed that way for the previous 10 years. It just wasn't growing. Just in the last 3 years, now these are small number gains, but it's big on a percentage basis. We're up to about 7,000 residents living downtown.
Wow.
Yeah, we've done a lot of research to other successful downtowns, and what we have noticed is that when you get to 10,000 residents living downtown, what happens is the numbers start to work so the developers can come in, start to renovate buildings that might be sitting vacant in your downtown, turn these into amenities, which of course creates this flywheel effect of encouraging more people to come and live downtown. And up till this point, what the city is actually doing is incentivizing developers. So the city gives millions of dollars to developers like JWB in order to actually do these projects, because right now the numbers don't pencil. They don't make sense until you have enough people living downtown. And so what we are doing is JWB is buying a lot of buildings downtown, not for the purpose of earning a great return on investment in the short run. We're here for the long run. In the short run, it's actually not a very wise use of our capital and our dollars. We can make a much better return on investment elsewhere. But what this is doing is starting this flywheel effect. So we actually can have an impact. We can be a player in helping to raise median incomes, attract future employers, attract folks living downtown. And our belief is that in the next 5 years and over the next 10 years, downtown Jacksonville will look very different than what it looks like today.
That's awesome. That's so cool. I actually was awarded one of those grants as well out in a market in downtown Covington, Kentucky, for doing the exact same thing, developing an old building. So yeah, very familiar with it. And I think it's an amazing program that they've got kind of going on in a lot of places.
You look at some of the other most successful downtowns like Nashville. We like to think of ourselves as Nashville in 10 years in Jacksonville. Okay. And it's the same model, right? You incentivize development in the beginning right? In order to increase the number of people living downtown and so that the numbers work. And then eventually the cities don't have to give these incentives and the development just works because the rents are high enough for it to make sense on an investment perspective.
Right, right. Awesome. Well, Gregg, let's circle back to the question of if someone is listening, thinking about getting involved in real estate, but not quite sure how, who is Turnkey a great solution for, and who should maybe steer clear and go another direction?
Well, I think the biggest differentiator is your level of active involvement. If you want to be an active investor, Turnkey does not make sense for you, right? Your upside for you to be an active investor is much higher. Of course, you are also going to take on a lot more risk. But if you have the stomach and you have the expertise and the time to do the active business, to actually get out there and source your own inventory, renovate it yourself or with your crews, and then manage it yourselves or even hire a property manager, go have a field day. Go do that because you're probably in a position to earn a higher return on investment. I think the turnkey or vertically integrated approach really works well when you compare it against other alternatives on the passive side, right? This really works well if you're somebody who would never actually go and pound the pavement and make hundreds and hundreds of offers to actually secure an undervalued piece of real estate. And if you do that, you go to the active side. On the passive side, though, you're probably an investor who has money in the stock market or in bonds, and they're just not performing like you want, or maybe you have too much money in those asset classes. You need maybe a third leg to your stool there, right? That's where passive investing in real estate can work. And that's where Turnkey plays really, really well. You can get the risk mitigation that you can find in asset classes like bonds with the upside that you can also find in stocks. And that's why rental property investing really is an asset class that a lot of money is moving to now. The key is, can it be passive for you? Can it be as easy and enjoyable as it is to invest in the stock market? And I know that's what you guys do over at Roofstock. You guys have made such a wonderful business model of making this an easy transaction. And, I think that's been the missing piece for most investors.
Yeah. No, I totally agree. I totally agree. So let's shift gears here slightly and talk about returns, because I think so many people listening, that's what's going to drive the decision. And when considering different options, that's what's driving the decisions. Hey, where can I get the best yield? Where can I get the best return? So we're recording this end of March 2022. Where are you seeing investors, or rather, what are you seeing investors' returns look like in today's market, given all the tumultuous nature that we seem to find ourselves in?
Yeah, listen, home prices are going up and interest rates are going up. And so what that means is that cash flows are being compressed. This is something that I've been talking about with clients for the last 2 years plus, once the dust settled for COVID and we knew that prices were going to go up. And so what we're finding here is that cash flows are coming down. But the interesting thing is that the data and the numbers show that this trend of home prices continuing to go up and interest rates continuing to go up is here to stay for at least the short run. And so what we're seeing here is home prices and cash flows will actually lead to further cash flow compression, further lowering of return on investment. And the same property that you would buy today is actually going to give a lower return on investment if you buy that property in future years, assuming that home prices and interest rates go up. So that's kind of the big picture of what we're seeing. This is becoming a less profitable business model because you've had such low home prices and such low interest rates in the past. That won't always stay the same. Specifically, though, for the Jacksonville market, what we're seeing are returns on investment between 7 to 8%. And that's not including home price appreciation. That's taking into account your net rental income, your tax savings, your principal pay down. But it's leaving off two profit centers that are highly influential: home price appreciation and, of course, inflation hedging. As we all know, inflation's a real thing. It's at its peak since the last 40 years. Right. And rental properties do a wonderful job of hedging against inflation.
Awesome. And Gregg, curious to get your thoughts on where you've seen the Jacksonville market go in the last 3 to 6 months and what your projections are. I want you to put some fresh batteries in your crystal ball and give me your take on where it's headed in the next 3 to 6 months.
I've never been more confident in where the market is going. I said that last year because the data was so telling as far as us seeing above average home price appreciation, and the data is even more telling. I'll tell you which data I'm kind of referencing. But over the last 3 to 6 months, we have seen 15 to 20% annualized appreciation in Jacksonville. Those are staggering numbers. We've never seen 15 to 20% appreciation over the year in Jacksonville's history. And you got to ask yourself, why is this happening? Well, it's happening because of low supply and increased demand. And when you have very low supply and increased demand, it puts upward pressure on pricing. Jacksonville happens to be an affordable market. So you've got a lot of upward pressure, and people can still afford to buy homes at this at the appreciated rates. You know, one thing that you can look at to see where pricing is going in the short run is something called months of inventory, something that we look at and we track. We've tracked every month ever since 2014 here at JWB. We track it because it matters. It tells us where pricing is going. And so what you're seeing is, if you look at the number of homes that are on the market, you can just divide it by the number of homes that sold in the previous month, and you get this measurement. It's called months of inventory. Historically, between 6 to 7 months of inventory, that would lead to average or normal home price appreciation, which in the Jacksonville market is 4.6% per year. That's coming from 1982 all the way through 2022. So if you got 6 to 7, you're thinking, probably about 4.6%, somewhere around there is what you would expect over the next 6 to 12 months. Well, last year, when I was super confident home prices were going up, we had like 3 months of inventory. Looking at it now, we have about 1 month of inventory in the Jacksonville market. And so that's why we're going to see higher than normal home price appreciation. I usually don't make a specific prediction. I can if you want me to. I'm not afraid to do it. But, you know, you got the big guys. You want me to do it? All right. I'm going to listen. It's better to go conservative. So I'm going to go a little conservative. I'm going to say 8 to 10% home price appreciation in Jacksonville.
Okay.
I think it could be higher. You look at Zillow. Zillow is predicting 16% home price appreciation, or 12%. I can't remember which one. Goldman Sachs is predicting either 16 or 12%. You go in most outlets out there, and they're predicting higher than normal home price appreciation. I think it could get that high. But the real reason why I'm so confident that home prices are going to go up is because you got to think about what it's going to take to get to an equilibrium level of months of inventory. You're going to have to build yourself out of this inventory crunch, and it's taking longer to build new construction homes today than it has even last year, and much longer and much more costly than it did a number of years ago. So it's going to take us some time. It's going to take longer than 1 year, and you still have room to run here in the Jacksonville market. So we're going to see higher than normal home price appreciation over Jacksonville over the next year, in my opinion.
Love it. You heard it here first, folks. 8 to 10% in Jacksonville. Let's circle back in a year and see how close you were. That's awesome. Gregg, this was awesome, man. Thank you so much for taking the time. If people want to reach out to you directly or learn more about JWB or invest with you all, what's the best way for them to do so?
Michael, thanks so much for having me. It's just really been a wonderful opportunity. For those who are interested to learn a little bit more about JWB, you can check us out online at jwbrealestate.com. We also do a show called the Not Your Average Investor Show. Would love for you to listen to that, either wherever you find your local, your favorite podcasts. And we also do a live audience as well. You can check out the show at nyais.com. We do it every Tuesday and Thursday. And if you want to join the fun club, come and hang out with us in the audience here on the show.
Right on. Well, thanks again, Gregg, and we'll definitely chat soon, I'm sure.
Appreciate it, buddy.
All right, everyone, that was our show. A big thank you to Gregg for coming on. Super interesting topic, a lot of really good stuff to chew on, and definitely going to be checking out JWB Real Estate Capital out there in Jacksonville. As always, if you liked the episode, feel free to leave us a rating or a review. We'd love to hear from you all, as well as include a topic suggestion if you'd like to hear something more from us. We look forward to seeing you on the next one. Happy investing.